Good evening, all. Ira Epstein of Linn Associates with your metal market wrap-up for this Tuesday, and we are now sitting here at October 19th, 2021 at 5:40 p.m., and that is Central Time. Now, before I go anywhere, tomorrow's the live webinar. I open it at 12:15 p.m. Central Time. I start the webinar at 12:30. It ends at 12:50. Pretty simple. If you haven't received your invite, take your cursor, just click on the screen as you move up here, an icon will appear. The way that YouTube works, those icons are there, but you have to click the screen up there to make them appear. Once appeared, if you don't do anything with them, they disappear in 10 seconds. Fill it out. We'll see you there tomorrow. Pretty simple. I'm not going to be doing another live webinar for 4 weeks after this. I've got other things going on, so you want to attend this one. There's so much to talk about. As you know, today, President Biden called in both the progressives and the moderate Democrats. The one thing that has come out of it is that crazy tax bill they had, where any amount over $600, the banks were going to be having a burden of sending information about that to the IRS. Who's at the IRS going to read it? I don't understand some of the thinking that goes on. It's gone. That doesn't mean there aren't other things in there. Polls are coming out and showing that Americans have shifted dramatically on this border wall issue. You know, if you go back to 2017, about 65% of Americans, 2/3 of the country, wasn't for it. On Fox today, they're showing that the new poll, it's still opposed by 49% of the people, but 46 approve it, and you have that margin of error. You're now 50-50 in the country because you're seeing all this craziness. I mean, today I'm watching the press conference, and they're trying to explain how planes at 2:30 in the morning are arriving with children and immigrants going to New York. They're trying to keep them out of the light. And their answer is no, 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 we're doing it for other reasons. I'm lost. And they try to think we're that stupid. Now, the interesting thing, one more in politics, you do realize only twice at midterm elections has a sitting president gained seats in the House of Representatives. That's going to be a problem because the margins are so thin everywhere, and 13 Democratic seats are coming up. I don't know how many Republicans. I just heard all this, so please don't think I'm pro-Democrat, pro-Republican. That's not what I'm trying to be. I just heard this, and it's late in the day, so I've been watching Fox for a change. I normally watch all three of them. I just split my time. Okay, we're pretty high up in all these energies. Are we ready for a little bit of a pullback? Could be. Something that you got to keep your eye on. Gold was disappointing. You know, it got up again, could have gone through that 1800 level. Instead, it backed down here. Silver soared. It got up almost 90 cents an ounce today. And copper's backing off a little bit. Okay, I can see the consolidation pattern. We do at the Linn Group something called price counts. And for those of you that are on our free price counts, and you can get it by just letting my staff know that you want to receive it. They did one on copper today. The third count, you can go to that third count without problem. 517, something to think about. Dollar down a little bit. So let's go to the chart action. As you can see, gold just having trouble getting up and through that 18-week moving average of closes. Here, let me show you. I consider today a failure day. You get up to 1786, and what do? You give up just about all of it, and here you are back at 17, in the neighborhood of what? 1769.70. What you don't want to take out is the low right here. Let me show it to you with the swing line, 1760.30. So if traders are coming in tonight and buying the market, I think they're looking at where you're at. From there, they've got about a $9 risk in the market. And a full-size contract, that's $900. That's, for this guy, still too big of a risk, just so you understand. What's the chart pattern right now? Higher lows, higher highs. But if you take out 1760.30 and you didn't go any higher right now, you could end up with lower highs, lower lows, and guess what? Where's that 18-day average of closes? You'd be under it to get under 1760.30. You could turn bearish like that again. Therefore, the line in the sand, it's drawn. Battleground, I think, is going to be 1762. If the traders buy that, they don't want to get under 1760.30. I can understand that argument and see if it goes. Now, another negative on it, there's always things you got to look at. Today's low in the market was 1763.40. To get down to where the 18-day average is at 1762, while you would still have the higher lows, you would then incur lower highs. Do you see that? So the chart pattern would be coming in like that. What about the resistance of the Bollinger Bands? Well, they're showing themselves. Next time if you drop, this could be a support zone. Could you just take it out that 1760.30 and go nowhere? Of course you could. I can't argue against that. But I think that it's time that the market try to be better. And the problem with it is you've got some formidable resistance between the 100-day average and the upper Bollinger Band. And making matters worse, you've got momentum pointing down. Not the prettiest chart. If you're inclined to risk a couple of dollars, you can see it. It's about a $170 risk if you're buying the 18-day average of closes. The gold-silver ratio plunged. Now let's go to the close. This is where the market finished today for Tuesday, 74.13. So you've given up 6 points, 6 ounces of silver. Isn't that cool? The way you think about it, you get a shopping cart, you fill up your silver in it, and you go to that store that charges no commission. You're pushing your 74 ounces of silver, okay? And what is that divided by? It's what, 16, right? So that gives you an idea of where you're at. That's just over 6 pounds of silver, and you're going to get that 1 ounce of gold in a perfect world. Not bad. Shows you what can be done. You're certainly not pushing tons of it around. When you look at silver, this is why the market's been faltering. It keeps getting thrown there. But there is a positive here. Take a look at the slow stochastics. Both numbers tonight are over 80, but you can't count tonight. We don't know where tomorrow is going to finish. So we got to go back to Tuesday. And when I go here, come on, let me go to Tuesday. Both numbers were over 80. The day before, they're over 80, not the day before. Tomorrow's the key day. If you embed, then I think the game changes again where you get even more bullish on that market until it's lost, until that red line would close under 79. In copper, I was betting pretty big with friends today. I got to tell you, I'm going to go out and have a dinner. Copper was up 1, 2, 3, 4 days in a row over the upper Bollinger Band, and I made a series of bets with my buddies. I said, first, I bet the market closes by the end of the day under the upper Bollinger Band. And if it doesn't, I'll double the amount for the day after. Well, it did it. So, whew, I can go eat now. I'm not bearish, but go do your work. That's what makes all the fun of this. And the work says that you don't get many times that you close 5 consecutive times on a lead contract month over a Bollinger Band in a futures contract. It's a little different in ETFs and spiders, so don't get wise with that. Understand the game that I'm making with it. Still very bullish there, too. Are you embedded? Oh, yeah. So on the breaks in this market, what do I think is going to happen? I think the pros are going to buy. Until that red line closes back under 80, it's game on. Now, if you lose that reading, you could be looking at wherever that 18-day average is of making a run for it. I wouldn't be bearish here. In the platinum market, okay, something happening. Are we suddenly trying to embed? So if we look at the market, you can't count Wednesday because we don't know where it's going to finish. Both numbers were over 80 on the close of business Tuesday, both that way on the close of business on Monday, and lo and behold, on Friday they were that way, not the day before. You have a fully embedded reading. As such, what was resistance could become support. Right here, the 100-day average, where traders are buying pullbacks in the market now. I would say they'll be out on any reading under 79. And if this holds and you pop, the upper Bollinger Band could become the next target. What about the palladium? Well, it's boring compared to all the other metals, that, as you can see. You have a higher high, lower low. You're not going anywhere. And when I go to the dollar index, I did not expect that. I expected the market to do a better job of holding this 18-day average. Instead, it decided to go so long, and boom, lower highs, lower lows, even with higher interest rates. So this whole rally that we had has run its course now. It has to all rebuild. The market is not yet oversold. Should the market get another wave of selling, I'd look for very strong support at the lower Bollinger Band and resistance in the meantime back at the 18-day average of closes. Dare I say the bears took control of the market? I think I can say that. So we should have some fun tomorrow. Take your time, go to our websites. You can view and see all the different things we do. You can look at all my new different videos that are posted there. We're getting a lot of traffic on it. You might want to take a look at that. And remember, to get into the webinar, you need a user ID and a password. In order to get it, just watch these videos. Click on up there, move your cursor. You'll see an icon, click on it, fill out the information. If you want me to cover spiders or ETFs for you or individual stocks, I must receive those before we get going so I can build the charts. Is that fair enough? Okay. I will see you all tomorrow. You have a great day.